Hey, it's Dave Knight here of 123daytrade.com. This is futures day trading tips, and I believe I'm on number 10. Do you have a tiebreaker as part of your trading strategy? And if not, why not? What I want to show you today, and this has been some of the most inconsistent trading that I do, is I reviewed last year and then into the first quarter of this year. And a lot of you probably already have this, and if you already got it, great. I'm preaching to the choir. But if you have fallen off the wagon, then you need to pay attention to this and see if you've incorporated this into your trading strategy as well. I'm going to pause the video right here. You can see this is Friday, February 26, 2016. And what I'm going to do is back up this trading day on my tick chart that we have in front of us. And I want to go over the tiebreaker with you today. And we'll hopefully make this no more than a 5-minute video or another 4 minutes in from this. All right, see you in just a second. All right, so here we are in front of the morning trading, and this is the crude oil contract. We're in the April contract of 2016 as I'm recording this video, and this is also it's also my clock is on Central Standard Time as far as the trading hours, and that's because Top Step Trader is on Central, and I like to coincide with that. Those that don't know I trade at Top Step Trader, or those that know I trade at Top Step Trader, and those that don't know that now you do. Anyway, so long story short, let's get over it. The trade itself is going to come in at 8:22 today, Central Standard Time, but I want to show you ahead of time what I saw, and actually I want to back this up to the morning here. So here it is right now at 8 a.m. Well, I'm in this bottom corner, but this is the 8 a.m. right here on top. So, and then what I want you to pay attention to as I get my screen draw tool out is this bar right there. So coming into the morning, we had 2, possibly 3 blue bar volumes, meaning that there's more sellers in the market right now as I look at it than buyers in the market. So this is what I see. So right now on this blue bar it was around, actually not around, it was 1,444 at 7:39 a.m. Central Standard Time. So then we have what I call the daily trading range or opening range. So let me go ahead and put that on the chart here for you. Whoops. And my daily trading range starts at 8, or opening range is 5 minutes. I should be moved over one more. So here it is, opens up at 8 a.m. This is the open outcry of the crude oil market. And it ends, and then 5 minutes later is where, and it's on the first bar of 8:05. So right here is your opening range. And it's a decent range. It's not small, it's not large, it's just medium. So, but more importantly, what we see, hopefully you've already seen it before I even getting the screen draw tool out. We said this bar right here was 1,444. Well, what about this bar right there? That bar right there was took place at 8 a.m. So we have one bar, this one, the blue bar volume, BBV, of 1,444, and this red bar volume, or RBV, comes in at 1,449 at 8 a.m. So what this is equal volume, pretty much. Within 50 or so points or contracts, let's say, we're going to call this equal volume. And what this means, or should mean, is that we have an indecisive market that doesn't know exactly where it wants to go, and it makes for choppy trading. So a lot of times what happens if you take trades inside this kind of environment, at least in my humble opinion, I run into my 50 tick stop loss very quickly, or actually I can't run 50 ticks at Top Step Trader on the max daily loss on the $30,000 account. I run into my max daily loss before I can get properly positioned into the trade itself. I'm running a little bit over, but this is a very important point. We'll try to wrap it up in the next 2 minutes here. Apologize, I'm getting over a head cold. Another reason why I put off doing this video. And this was a very good example, so I wanted to show you. As you can see, I've already drawn on my charts the entry point that I saw today, and then I'll show you the exit point. Now, you also see another thing, correct? And this is where the tiebreaker comes in. So you're in sudden death, and now the coin flip happens, and you've got the ball. And you called heads, and heads came up. I want the ball. I want to score first, right? This is I've got the ball. But what should you be doing? It's a blue bar volume, and this is where you see it right now. And before this sell, and you can see that I shorted the market is ascending. It's making a move up. And you would think that, hey, it's breaking out to the upside. We've seen a lot of upside movement during the week, blah, 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 blah. It doesn't matter. All of that is irrelevant. You've got to trade inside the moment. You got to carpe diem, right? Seize the moment, seize the day. So this ends up being what I call a double top. When you within a couple ticks of the amount, and then on a 5-minute chart, this may or may, I forget if it showed this is 1 bar or 2 bars, but regardless, this is a double top DT, and you can use your same buying or selling points to get yourself in. So here's your setup, and then the breakthrough. With me, the wave pattern comes in. You see your high point. We have a double top. We can use the same low as before, and we want to get short. You can see it comes up just a little bit, and then it does sell off. All that screen draw, right? And what did that was at 822 at 3449, and I like to go with what I call a 3P profit target on any given trade. And today's 3P profit target brought it in at 3368 down. I think I drew it on the charts. Yeah, right here was 4P down. So once you get what you want to trail behind, right? And this is the 200 bar SMA right here. Let me draw the screen draw out here again. So here's my 200 bar SMA trailing behind a trade. Here is 4P right in here. That was at 3341, I believe, today. And then it bottoms up, and then it comes back, or bottoms and then comes off of it. It does end up going down later, but this trading session, as far as a Friday, is over. This was the exit point of the trade at 3P, and today that was 81 ticks. So to come in, and the exit point right here was at roughly 9:33 a.m., 9:33, almost close to 9:34 on the exit. You could have got anywhere out in between there, or even at this point right here is 9:36. Or you could have got out at 3P as it went down to 3P. But I like to trail behind it until I see it prove otherwise. And what's the proof otherwise for me? It's this trailing by the trailing line, and it works a lot better on the short side, and especially since we're still in that long-term downtrend. And I just want to go ahead and just say that this is a very powerful trading strategy to hopefully keep you out of indecisive markets, or the chop, right? The CHOP. Sometimes I call it the chomp, CHOMP, and sometimes you're a chomp because you're trading the chop. So try to say those 3 C words quickly, right? That's about it. That's what I wanted to go over here. Futures day trading tips, number 10, and this is the tiebreaker and how you handle it. So hopefully this is something that you incorporate in your trading, and if not, you need to have a plan for this. This is something that's very powerful, and it'll keep you out of bad non-trending markets. We're looking for, at least I'm looking for a trending market. And if you're a trend trader, you do not want to be in the area that just beats the living daylights out of you and allows you to hit those stop losses very quickly, and you don't have enough ammo left, at least most of the time, to recover from it, and you see the market go the way that you thought it was going to go anyway, but you don't have the ammo. You've already shot all your shots, and you just, it's a frustrating. Trust me, this is one of the biggest downfalls of day traders, is not having enough ammo to stay in the game. So hopefully this will keep you out of some bad trading decisions and allow you to make some good trading decisions. And I do apologize. Like I said, I'm getting over this head cold, and you can hear it. I'm a lot better, but I wanted to make sure that I did this recording and I did this futures day trading tip for you. We are going to be going in the intermediate course. I'm going to start it in March. I'll tell you more about that in March, which is coming up very quickly. Tuesday, March 1st, I'm going to make a little announcement about the intermediate course. And that's about it. God bless, take care, and we'll see you on the next video. This is Dave Knight from 123daytrade.com. Take care, God bless, and see you soon. Bye for now.